Hello guys, hope I am not too late for tonight. So, the subject of today is trading with ETFs. So in this session, as usual, I will begin with developing this subject. I try to speak a lot about ETFs, and then I will answer your questions about the market, about what's going on, and about what we are doing in our trading and investing portfolios and the other stuff. Okay? So, as you might know, in ETFs, ETFs first stands for Exchange Traded Fund. So what does it mean? It is a fund, okay? It means it is a fund. It's like a mutual fund, but instead it is automatic. So automatic means it is just tracking an index. I will give you an example. Let's say we are speaking about the index Dow Jones Industrial Average. Okay. Now, as you can see, we are, I think, in 23,000 or 24,000. So the people, you cannot buy an index, okay, as it is. You can't buy the index because it is just a collection of stocks, and they give you the average at the end of the day after 4 o'clock. Okay? Because it's not the stocks, when they move, it will be very, very difficult for an index, okay, to get the precise information of what the stocks are doing in it. For example, if we take, for example, Dow Jones, we have 30 biggest companies in USA. Biggest, it means in terms of capitalization. And understand, guys, this index have been here for more than 120 or 130 years. I'm not giving you history, but you can just go online and you find the history. But the main thing is that it has 30 biggest companies that are big. It means big in its capitalization. It means capitalization. How do you calculate it? It means you take the shares outstanding and you multiply by the price. Even the price is small, but you find that the shares, you find billions of shares. That's why this company is so big. And most of these companies, they have been here for long. Okay? Some are new, but they are so big because people, they like them. Understand that investing is all about opinions, and so. Let's see who is here. AJ, you say, hi, Professor, long time, how are you doing? No, I am not Professor, man. I am just a trader. I'm just a simple trader. Professor is someone who has a PhD and he do more studies and he becomes professor. I am not. I am not. So, NASA, hi, teacher. Alexander Alvarez Dominguez. Hello, sir. Hello, Fabian. Hello. Mike L. Hello. Thank you very much, guys. I'm trying to develop the subject. Please, if you have questions about the ETFs, because we try first to have all my questions about ETFs, and then when we finish the subject, we can ask any other question, okay? The first come, the first served, as they say. Hello, Top Series. Now, let's drink some coffee because I have a nap and I just wake up just for you guys to give you this live session. Okay, so as we have been speaking about Dow Jones, so an index, how does it work? It means the information from the stocks will be hard to get the exact information. That's why when you want to see the index, it's better to see it, let's say after 4, in order to get the exact information. Okay, and the index, we can't trade it. It means you don't go to the real index Dow Jones and you go and you buy it and you sell it. You buy it and you sell it short. You can't. Okay, so this you can't, because it doesn't exist as for trading. It is just a benchmark, like S&P 500, like Dow Jones, like Nasdaq. There are a lot of benchmarks that here in USA and the whole world they are following. Even outside, they are following Dow Jones and S&P 500. Another one is what we call S&P 500, which is 5 big companies, 500 biggest companies in America, but they are less capitalized than Dow Jones. Okay? Now, each of these indexes have what we call an ETF. An ETF, what is it? It is just like a similar thing, but you find it with a smaller price, and it just tracks. It tracks what the index is doing. So it's very good. So you can buy it for long. You can trade it. It means you can buy it long. You can sell it short. They have, for example, options. You can do whatever you want. It's like a stock. But really, it is not a stock. Understand that an ETF has a fee. This fee is taken like in the whole year. It could be like under 1%. It could be 0.50%. It could be 0.75%. But most of the ETFs are having smaller fee than mutual funds. Okay, mutual funds. I will speak just in a while. In a little bit, I will speak the difference. Okay, so these ETFs, they are like stocks. Okay, they are like stocks, but it tracks an index. But understand, it can track anything. This is where it is so dangerous. Okay, it can track, for example, options. It can track, for example, futures. It can track cryptocurrency like Bitcoin. So be careful. You should know what this ETFs is tracking. It's so important. Those who don't know, they can have a big problem. In last year, the other year, and the other years, some people get mistaken. They think an ETF is like it tracks something, but it's okay to trade it. But they don't know, in general, what this is doing. It's tracking what, and is it the same amount, or is it double or triple or so? Okay, so try to understand. So in this session, I'm trying to develop some information that you might need to know the ETFs. Okay. Now, what is the difference between an ETF and a mutual fund? Because a lot of people, they get confusion. They don't know what's this ETF and what's the mutual fund. It's all mixed up in this market. We don't understand. So for me here, I'm trying to explain this into simple way to understand. A mutual fund is a fund. Okay, fund, it means a collection of money. that it is collected from people, or like mutual funds, you find them always in like 401k, in other plans. So what are they, and what's the difference? A mutual fund, I say it is a fund that it is managed by a manager. A manager, what does he do? A manager, he is like an investor, okay? They pay him, which is very good. So what does he do? He just buys stocks into this fund. But the fund itself has a price, okay? It has a price. It works like an index, okay? It works like, but it is not an index, okay? Understand? It is like a stock, but the problem, you cannot buy it. You can buy it and you can sell it, but after 4 o'clock. So it is different from the index that we have spoken about, like Dow Jones. You cannot buy Dow Jones index, okay? But you buy the ETF that tracks it. Now, for mutual funds, it's a fund. It's like an index, but you can buy it, okay? You can't sell it short. You can't. But you can buy it after 4 o'clock, because all these stocks that are in this fund, you will get the real price after 4 o'clock, because there are a lot of calculations. And after 4 o'clock, you go to your, for example, if you like to buy mutual funds, after 4 o'clock, you go to your broker and you find the mutual funds and you buy. You buy mutual funds if you want. If you like a manager, for example, a manager, he is like a he's like an investor. You like what he did, and he is always getting good results in the market, because he chooses stocks very, very well. So you can buy a mutual fund in your account, okay? Because you don't know how to pick companies, like investing, you don't know. So you give this job to this manager. And the one simple thing to understand, if you go to your 401k or any other plan, retirement plan, you find it is almost all mutual funds. That's why you can go there, you can delete some, you can, because all you buy it by percentage. You can delete some, you can change some, you can do whatever you want in 401k, but unfortunately people, they don't know all this stuff. That's why I make a lot of ebooks about investing, about this. It's just to make people aware of where their money is going, okay? So, as we have seen, let's drink some coffee, guys. So, we understand the difference now between mutual funds and ETFs. Okay? So, if you want to buy a mutual fund, you can wait until 4 o'clock. After 4 o'clock, you choose a mutual fund and you buy it, even in your account. Okay? Even in your account, your individual account, or you have a Roth IRA, you can do that. But you should see a big... you should see a big broker, because there are some small brokers or other brokers. They are for day traders. They don't like mutual funds, and they don't sell them. Okay, so understand that. Now, what is the difference in terms of fees? Now, understand that mutual funds are more expensive. More expensive, it means they will take 1%, 2%, 3% of your money each year. Understand that they are taking money. So this is not a game. They are taking money off your account. That's why 401k, why they don't let you buy stocks. And this is a secret that most of the people who know 401k, they are not aware why in general, Wall Street, those guys who manage money of the people, why they do mutual fund. And now ETFs, it's just a competitor to mutual funds. So you will find thousands and thousands of ETFs. They track everything. For example, you want to track you want to track gold, you find the GLD, it tracks gold. You want silver, you find SLV. I always show to you this thing. But before this is, I think it is understood the difference between a mutual fund and an ETF. Now, about fees. Now, ETFs, it's like stocks. In the morning, you can buy them, you can sell them short, you can have a lot of stuff. But ETFs, there are a lot. Okay, there are companies that they make these ETFs. For example, they see, Bitcoin. We want to make an ETF tracking Bitcoin. You don't have to go to for example, to Coinbase and to buy Bitcoin or to buy any cryptocurrency. Okay, you can just in the stock market you can buy it without going outside stock market, because stock market ETFs gives you anything that you want from all other markets. For example, if you want to track futures, it is another market. Okay, it is not stock market, it is another market. There is no stocks in futures, but you find in stock market, you find ETFs that tracks futures, cryptocurrencies, for example, Bitcoin, for example, forex. If you want to follow and to track the dollar against the silver sterling or whatever currency you want, you find ETFs. You find ETFs that tracks sectors. For example, energy sector, in technology sector, like any other that you want, drugs sector, you find ETFs. So ETFs, there are a lot. If you go to the chart, I will show you. I will show you right now when we finish this small presentation. I will show you some of the stuff and I will continue explaining. Okay? Explaining these ETFs. Now, let's just for a second, I say hi to the other guys. Mal A, Top Series, and just I will see the other guys that are new here. Hamza Sabir, thank you very much for coming. Michael Carpio, thank you very much for... Hello, Stock Doctor. Stock Doctor, yes. I am trying to do some stuff in the stock in these stocks. Yes, maybe, but I am not a real doctor. Okay, I am just in stocks, which is virtual. I don't cure coronavirus and the other stuff. You know that. So just stocks. I am a doctor, not of stocks, but of the traders that are doing stocks. Okay, because I am always try to fix the psychological problems of traders and investors by giving them information, because information is power. When you know something, you know how it works, you can act good in the market. If you don't know what you are doing, like someone before, he goes and he bought an ETF that tracks options, and then the next day he bought 12,000, ETF. He thought it is just a stock. Well, what's the problem? A stock like any other stock. He see options, but he doesn't know what does it mean. Why this ETF has options in it? So there is a gap down next day, and he lost 90% of his money. Do you understand? 90% of his money, he lost 12,000. The next day he find only around 2,000. And when we are doing a live like this, he comes here and he said to me, please tell me what's going on with this stock. He doesn't know even that it is an ETF. Understand that an ETF, it is not a company. That is a problem if you don't know what is an ETF. ETF, it is not a company. It is just a vehicle of, like a stock, a vehicle of investment, of buying, selling short, buying long, investing. You can do whatever with this, but it is not a company. Okay? It attracts something. So understand the thing. So if this guy knows that this ETF is about options, and options, is a leveraged vehicle, if he knows that, he will never buy that. Or he will buy $500 or $100. Okay? He buys just little because it is leveraged. That's why someone asked me about leveraged ETFs. I am not going to answer right now, but I will develop the subject. Okay? So we have Duna, hi teacher. Alonso, hi. Okay? Okay. So I'm not going to, guys, I'm just saying hello for the guys who are coming here. And I understand, I will continue to explain ETFs. Now, I will show you, just if we can, we try to go to the chart if possible, and I will show you some ETFs, just to make sure you understand. Okay. I always use this stuff. Okay. Let's go and check the chart. Okay. Thank you very much, guys. Look at the chart. Okay. Now, look here. DIA. It's called SPDR. It means a spider. It's just the company, or the company that does this ETFs. It's called spiders. So Dow Jones Industrial Average ETF. Look at the ETF. Okay, ETF. It's written. It's a closed-ended fund. It's in equity. It means in stocks. Okay, and it is a fund. Now, ETFs tracks the Dow Jones. Now, I will give you, now, Dow Jones, it is $237.14. Now, what is the index that the DIA follows or tracks? It is called DJ30. What is the, yes, Dow Jones 30. Now, look, Dow Jones Industrial, it means the index, is at $23,719.37. So this is the index. Okay? You always found when all the people, they follow the Dow Jones like this. They say, okay, it goes $285 today. It means 1.22. Sometimes it goes to $1,000, $1,500. Yeah, it means sometimes it gets higher and lower. Okay. Now let's go back. Dow Jones. Now, if you want to see S&P 500, this is the same ETF. It tracks S&P 500 index, and it is well watched benchmark in the whole world, because it gives you in general what the market is doing in general, because it is the average of all the 500 stocks. 500 stocks, some are good, some are bad, but this is the average. Okay, then you find Russell 2000. I like this three. Okay, I always like these three benchmark. I don't like the others, so I use these ones, especially Dow Jones. Now, let's say you are interested to know, for example, to know gold. Here is gold. Okay, here is gold. So gold is $158.69. So Spider Gold Trust, it's an ETF that follows gold. For example, you want to invest in gold. Okay, you want to invest gold. You want to trade gold. You want to do whatever you want with gold. So instead of going to the other market, okay, and buy gold and keep gold like the other physical gold, it's easier to buy gold from here. Okay, let's say here gold was $114 here in 15 of November 2018. It was 114. Now it is 158. Okay, after 1 year and a half or something. So you don't need to go and buy gold. Silver also, SLV, is worse than gold. It means it's not doing the same as gold. If you see the two charts, they are not the same. So gold, people, they like gold better than silver. Okay, silver is doing bad. So this is in general what we call the ETFs for indexes. Now I will continue to explain a little bit, and then we can go and explain something related to sectors. So okay, so as I told you, ETFs, as I told you, you can trade ETFs, you can buy them, you can sell them short. In the day, it's like a stock. Okay? For example, you have heard some good news about gold today, and the market is not doing good. You can just go to gold, or you can go to gold stocks, because you don't have to go to other markets to buy gold, physical gold, and to have problems with keeping it. And if you want to sell, they give you bad bid. Understand that you get trapped if you buy gold and silver into coins, and the market goes bad. And you need the money. They give you a bad bid, and you can never sell them good. Okay? But if you buy stocks or ETFs in gold companies, you can make a lot of money, because it is something that you can buy easily and sell easily. This is why stock market is better than the other markets, because it's easy. Okay? Now, when we speak about the general market, we speak about Dow Jones. And Dow Jones, we have a lot of sectors. Okay? Dow Jones, we have a lot of sectors. So, what I should do now, before going to see the sectors in ETFs, okay, I will just take you to Dow Jones to see the 30 stocks and where they belong to. Because they belong to many sectors. So here we are. So let's go to we go to Dow Jones. Okay, here are on the left side, as you can see, all the stocks that make the Dow Jones. Now, if you can see Apple, it's a new company. Okay, it's not like the other stocks other companies that have 50 years or 60 years or 100 years. It's just it's a new stock. But as you can see, Apple belongs to the sector computer hardware, and this industry, it is called personal computers. Okay, so computer hardware is the sector. Now we go to this UNH. It is in healthcare services sector. And who put these sectors? It is Morningstar, which is a company that makes the sectors and industries. Okay, so if you go to other companies, you will find different names. But this is a Morningstar that this chart follow. So as we have seen, Apple, as you can see, is computer hardware. UNH is healthcare services sector. HD is Home Depot. It is retail. Okay. GS, it is financial service. Goldman Sachs, it is a broker. Okay, it's a broker. McDonald's is leisure and leisure sector, and the industry is restaurants. But we speak about sectors only. Visa is diversified services. It's Visa, as you might know, it's a processing company of payments, and it is well known in the whole world. Microsoft, it is computer software and services sector. So Microsoft, it is not like Apple. Okay? Because Microsoft is related to software and services. Okay? Boeing is aerospace and defense. Okay? MMA is conglomerate. Okay? It means conglomerates. It means a company that has a lot of things to do. It's most of these companies are so big. Okay? And they do a lot of stuff. G&G is drugs, as you might know. It's one of the biggest companies in USA. Caterpillar manufacturing. Walmart, always retail in Walmart. ABM computer hardware. PG, Procter & Gamble, is consumer non-durables. TRV is insurance, like Geico, like the other stuff, insurance. Disney, it is like in the media, and it is entertainment diversified. It means it has a lot of diversified because they do movies, they have leisure places where you go to play, and a lot of stuff. JP Morgan, it's banking. It's a bank, okay, which is very, very known in America. American Express, it's a credit card, like what you know. Nike is consumer non-durables. CVX, Chevron, it's energy. Okay. Mark is drugs. RTX, aerospace defense. And VZ, Verizon. Most of the people are using one of the biggest companies like Verizon or T-Mobile or AT&T, but Verizon is one of the biggest companies in telecommunication sector. Intel, it's in electronics sector, as most of the people, they know it. Coca-Cola is in food and beverage sector. WBA, it is in retail. Walgreens, most of you guys know Walgreens. Okay, it's one of the biggest companies here in America. Exxon, it's in energy. Cisco, it's computer hardware. And this Dow, it's a new company. I don't know what this Dow do. It looks like Dow Jones, but I don't know what it does. But it seems it's a very big company that it is added. I don't know which year, but it is added. It's new. And PFE, it's in drugs. Okay, so let's go, guys, to explain a little bit. Let's see here. So, guys, as I told you, I have given you an example of Dow Jones, which is the index, and we saw all these 30 stocks that are biggest stocks, and we saw that DIA is the ETF that tracks them. Okay, it's very, very simple. Now, understand that the market is divided into sectors. Understand that sometimes sectors, they are not the same in terms of growing. You find some sectors are doing good, some they are doing bad, depending on the market mood, okay? Depending on the sector itself. For example, I give you just a small example. For example, energy sector have been hit even before the market, because 3 countries, they sell more oil barrels into the market than expected, so the price of oil goes down. These countries are Saudi Arabia, Russia, and United States of America. So the prices go down. So what does it mean when the prices go down? This sector of energy, it has been hit. And these companies, they lose money because they are selling oil. It was, I think, $60 like a few months ago. It was $60 a barrel. It goes to $18. Okay? Do you understand what does it mean? It means 2/3 of the money of this company has been lost. That's why you see when you go, for us it's very good when you go to fill gas in your car or in your truck. It's very nice because it is so cheap. But understand that some people get fired from these companies, and these companies have troubles. Now, when the people know that energy sector is bad, they will go and sell short these ETFs. And they sell companies' stocks. They sell them short. They buy put options. They sell short the ETFs. Okay? Because there are some people who they don't want to buy to sell short many companies. So what they do, they say, okay, we go to the ETF and we sell it short. It's better because it is simple. It is simple. If all the companies, most of the companies are going down, the ETF will go down. Okay? So it is simple to trade. That's why my title of this session is Trading with ETFs. So it is so simple. You can sell short the ETF, which tracks the energy sector, which is better. Okay? So guys, we are at 38 minutes. So now let's give you the sectors. Now, guys, if you want to go to have, for example, your chart, and you can put these sectors in your chart, and you keep them each week. For example, take 2 minutes or 3 minutes, and you just go through them. See what's going on. Are they going up? Are they going down? What's going on in each sector? Because now, when we speak about sector, we are not speaking about the broad USA market, the Dow Jones or S&P 500 or Russell 2000. There we are speaking about a lot of stocks, different sectors together. But understand that when you see the ETF for a sector, you are seeing only that sector. For example, if you are seeing banking sector, Banking system, it means all the stocks that you see are all banks. It could be small, it could be big, it could be national, it could be international, it could be a small bank in a state, it could be a very, very small bank. Okay? So understand that you are dealing with only one sector. Okay? So, I will go to sectors because I have them ready for many years. And I can even show you when I put them which sectors are good, which sectors are bad. And I will show you the year I put them together. So let's go and check them. Okay. So let's go and check the sector. Okay. So guys, let's begin with these sectors. So guys, pay attention because I will be very, very quick. I don't want to spend a lot of time. So just see here is the ticker. It means the symbol XLI. So what is it? It is the industrial sector. Okay? So instead, if you see, for example, industrial sector is good for you and it is doing better than the major index, you can buy an ETF like XLI. Okay? So industrial, health care sector, XLV, consumer discretionary, materials sector, technology sector, real estate sector, and energy sector. Okay, energy sector, as I told you, it was hit a long time ago. Look here. Check here. Here the sector was $79. $79. Let's say it is 80. Now it is 33. Okay? So it is a big percentage. But the market, if you go to the stock market, it has begun going down just right here. Just in February it has been going down here. But energy sector, as I told you before, it has been going down since a long time ago. Since let's say here, since 2018 in May, 21st May. See, there is a trouble for energy sector. It's not from these 2 months when we have the stock market collapse. So it was way before. So understand, this is just an example that this sector is bad compared to the market. So if you have the knowledge before, you know how to trade, you can from this beginning, when you see this market or of the energy is going down, you can sell short or you buy put options. You could make a lot of money. Okay. Now, consumer staples, financial ETF, utilities ETF, metal and mining. You see that metal and mining is the same. It was doing bad for a long time. Okay? It was doing bad for a long time. So, if you know that metals and mining ETF, it means all these stocks are doing bad. You could put options, or you could sell short, or you could do whatever you want to do in order to make money. Okay? If you have the knowledge. Healthcare services, regional banking, technology hardware, home builders, software and services, innovative technology, insurance, biotech ETF, S&P 500, bank ETF, oil and gas equipment. You see that? As I told you, all the sector in energy has been bad. So here, the oil and gas equipment and services, it was 191 here. Now it is 27. Do you understand that if you have this sector before and you are not, you have been investing in oil and gas equipment and services and you didn't sell, you will be losing all your money, especially those guys who are still holding losers. You see here 191, now it is 27. It means all your money is gone. So here, when I told you that you should check if you are interested to buy or to sell these ETFs, you should check them before you do anything. Okay, internet sector, healthcare equipment, and you can see that healthcare, it's not always the same, because there are a lot of healthcare depending on what they do, but they are belonging to healthcare. Telecom, capital markets, oil and gas exploration and production, it's always the same. Oil and gas is always doing bad. Pharmaceuticals, aerospace and defense, semiconductor, okay, New York Exchange Technology ETF. It means this New York Exchange. It means the stocks that are in technology in New York Exchange. Okay, so in technology, as you can see here, there is a gap down. It means in those technology stocks in New York Exchange, they get hit here in this. I don't know what's going on in this technology here. From 77, they go to 54. It means there is a major event here. Okay. Transportation also, it gets hit. And the last one is retail. Now, this is all for sectors for you guys. Now we have finished with these kind of sector ETFs. Now we try to see what we call leveraged ETFs. Okay? Now, for you, those people who don't know what does it mean leveraged ETFs, I will give you just a simple thing to think about it. And if you want more information, you should just check my ebooks or my training, or you can go online and you find them easily. Okay? So what does it mean leveraged? Leveraged, it means that you find, for example, not one ETF for one index. You can find 3 ETFs. So why they put 3? I will just if I can use the if you can use the okay, if you can use the okay, let's see if I can use the paint. If I can use it. Oh, okay, I can use it. It's very good. Okay, look. Now, let's say I give you an example of DIA. This is Dow Jones. Okay, this is Dow Jones, the ETF, and it is one of the ETFs. And here it is the big index that you can't buy, you can't sell. This is the big ETFs as we have spoken about. And it has 3 ETFs. Now, leveraged, it means when it is doubled. Okay? It is doubled. For example, let's say the percentage, let's say the index goes 1%, just an example, okay? 1% in the index, this DIA, it goes 1%, which is excellent, because this DIA, okay, it tracks the index as it is. 1%, 1%. You can find sometimes 0.1% or something because it's a big calculations. Okay. Now, what does it mean 2x? 2x, it means they will make another index. Okay, and this index you will have 2%, and here 3%. So this is big. This is big because the risk is too much. It is doubled. Here the risk is doubled and or tripled. And you can make a lot of money if you are right. For example, let's say the index sometimes when we have, for example, 5%. We have seen this in Dow Jones when it goes, let's say 1,500 or 1,600 points or dollars a day. Okay, let's say it is 5%. Now 5%, you get 5%, which is normal. You get 5%, but for the second here 2x, you are getting 10%. Now how much you get here? You are getting 15%. So 15% in one day, it's a lot of money. But the market in real, it has done only 5%. So these are called leveraged ETFs, and they are very, very, very dangerous. And when I did my ebook about how to trade ETFs, I have spoken about all these and I give all the stuff. So my aim here is just to show you what does it mean, this leveraged ETFs. Okay? So let's go back. Now, we have finished the leveraged ETFs and ETFs, they are making more and more. So companies, they are making more and more ETFs, more and more mutual funds. Understand that America is one of the biggest stock market in the world. They make a lot. Why? Because they can make a lot of money from the fees. Understand that, for example, the fee for an ETF, when you buy it, it is, let's say, 0.50%. But understand, so I will just explain this. At least people will understand what I'm talking about, because sometimes they don't. Okay, I will give you just an example. Okay, so ETF fee, it means the money that it is taken from the ETF is 0.50%. So it is less than 1%. Less. Okay? Now you think that this is just it's not big. Just 0.50%. It's not big. But if you go to an ETF that the capitalization is $10 billion. $10 billion, this is the ETF capitalization. It means the shares, which are just virtual shares, multiply by the price of this ETF. Okay? This is the capitalization, the capital of this ETF. Now, if they take 0.50%, what does it mean? Okay? So, 5%, 0.50%. Now, let's say 1% from 1 billion, if I am not wrong, it's 10 million. Okay? 10 million. Okay? 10 million. And 10 billion, it is 100 million. So these guys, this company that have this ETF makes $100 million a year. Okay? 100 million. From where it takes this $1 million? It takes it from the price. It's like the dividend. It's the same as the dividend. It's taken from the price. Okay? So let's say the price of the ETF is, let's say, just an example, okay? It's $100 and 50 cents. So the real price of the ETF is 150 cents. But with the year, they will take this 50% and the ETF is only 100. So this 50% is $100 million. And it goes to the company that makes the ETF. So why we have a lot of ETFs? Because the companies that makes an ETFs will make hundreds of ETFs. And these hundreds of ETFs, they will make billions of dollars each year. Billions of dollars. So you understand? And all this is what we call Wall Street. It means those companies are making money because they make an ETF, and all this money goes to the company. Okay? So if they have 5 or 10 ETFs or 20, they will make more. And they try to be like diversified. Okay? Diversified. For example, they can, for example, do an ETF. Let's say about China stocks, like in China. Okay? So they can do an ETF about China, about any market in the world, about gold, about cotton, about anything that moves in the market, cryptocurrencies, Bitcoin, anything. Okay? Now I will give you just another way. I think that in the future, you will find in your 401k. Now we have only 401k for those who have 401k. I think there is no ETFs right now, but I think in the future they will add them. No ETFs, as I might know, I'm not sure, but in general there is no ETFs. So the reason there is no ETFs because in mutual fund in 401k there is a mutual funds. Now mutual funds are taking more. They are taking like 3%. So if we give an example of $10 billion, okay, so how much is 3%? It is $300 million for a mutual fund that they will take each year from the mutual fund. Okay, 300 million. Now, who will lose money? It is the investors in 401k. For example, you have 401k, you have mutual funds. Understand that in each year you are losing money. 3% of your money is lost. Either the market goes down or goes up. You are always paying this. It doesn't mean that you pay 3% because mutual funds, one is a 3, one is 2.50, one is 150. It depends on the mutual funds. But all they took money from your 401k. That's why 401k is a Wall Street idea. It means these guys in the government, in the market, they created this 401k to take money from the people. But understand that in some way it is good because companies, they give some money to the investors, okay? They give some money to investors. And as you might know, it's very, very detailed and it's very, very detailed business. And if you want to go, you should do your search a lot. And because it is not obligatory that you do 401k, okay? So you should go and study more and more to get a better idea, okay? So for me, as you might know, I am here just to make you aware about things. And in the future, it means if you want to take a decision, you should study well what you have as investment, and you see the advantages, you see the disadvantages, and you can go to your CPA, it means your tax accountant, and you explain to him, you ask him details, or you can go by yourself and buy books or read books, specialized books in 401k, because they will give you more secrets than me. I am not an expert in 401k, but I know general information, and this general information, it helps you understand what's going on. Okay? I think now it is 1 hour 3 minutes. I think I have finished the ETF stuff. So, guys, from now on, please begin to put your questions. So I will begin with the beginning. I'm just saying hi to these guys. So we begin with AJ. Hi, Professor. Long time. How are you doing? I'm always here. It's you, AJ, that you are not here. It's Saturday or Sunday sometimes. You know, these weeks I do Sunday. But I can change it to Saturday or to Friday. Depends. So I am always here. It's about you. I know you are hiding because of coronavirus. All the people are hiding, but it is very good because you will be there for the market. Coronavirus has done something good because the people, they stay home. So what they do, they can watch the stocks, they can watch ETFs, they can see their investment, they can read books, they can do a lot of things that before they can do. Because now they are obliged, okay? Some place you can't go outside, you can do this, you can do that because of the thing. Now, Nasa, hello teacher, hi, Nasa, Alexander Alvarez Dominguez, hello sir, hello, Fabian, hello, Mike L, hello, Top Series, hello Karim, hello Top Series, Alexander, he said, hello, I would like to know are the best indicator for you to buy or sell stock. Man, Alexander, Alexander, I don't use indicators. Okay? I don't use them. My indicators are so different. They are not related to moving averages or to other. Why is that? So this question, each week, I got the same question by someone, okay? The people I don't know, each day. What is an indicator? Okay? An indicator, it is a small strategy done by a trader. He sell a book, he make millions of dollars, and then he is sleeping now. This is what we call an indicator. Now you think that an indicator will show you the future. Okay? Now the future is about time. Now, time that doesn't come, we will never know what's going on in the future. You can predict, you can speculate, you can have a strategy, yes, but for sure it is just a strategy. Now, if you take indicators and you mix them up, you will be in trouble because each strategy asks you to buy here. The other strategy to ask you buy here, sell here. Okay? So, from this standpoint, I'm telling you that if you want to follow me, you should follow my strategies. You don't follow indicators' strategies or other traders. I am a trader. I have my own strategies in everything. In investing, in options, in ETFs, in stocks, in penny stocks. Each way, I have a given strategy. I have my own criteria that I use. So if you want to follow me, either you do subscription, like golden subscription or like silver subscription or basic subscription, or you can order my ebooks, they are there, or training by video, and you watch them and you understand how I trade. Now, Alexander, for me, I will not train you for free. This is known. I am a business, okay? I am a business, and my services are paid services. Here, what I do, here I just train by giving the broad things you should be aware of, but I will not give you details, how to trade, how to buy, how to sell. Okay? So this is, I think you might know. It is like you, Alexander, you go to a surgeon doing operations in the brain, and you come to him, to his office, and you say, can you explain to me how to do an operation in the brain? Well, what do you think? What do you think this surgeon will tell you? He will tell you, okay, I can't explain to you because you need years to study. So, in order to go to do this, you should go to a medical school, and you could study for 6 or 7 years, and then you become a surgeon, and then you can do like me. So, for me, it's the same. Okay? It's the same. I am not a surgeon, yes, but I know how to trade. So, if you want to get knowledge, you should just get my training and follow me. Okay? So thank you very much, Alexander. I think, Alexander, right now you understand how businesses are done. So I have explained to you that indicators are lagging information. Lagging, it means old information. If I tell you, just an example. Facebook was $17.55 in 2012. Does it mean that now you are going to buy Facebook? No. Okay? No. You should have a strategy at each price. There is always a strategy that you should follow, and you buy now or in the future or in the past, as you have seen, and you can make money from Facebook or Apple or any other stock in the stock market. So there is always a strategy. But my strategies are different according to the mood of the market. If the market is going down, you can't go long. You should do strategies that are going short. Okay? And this, you should have knowledge how to do that. It's not easy. So you can use ETFs, you can use shorting stocks, you can use puts, you can do other stuff. Okay? So thank you, Alexander, for your question. Mike L, do you day trade leveraged ETFs? No, I don't do day trading. If I want to do day trading leveraged ETFs or stocks, I should go to futures. Futures is a leveraged vehicle, and you can make thousands and thousands of dollars from little money. Okay? But the risk there is too big, and you should follow the news. You should follow a lot of stuff to be a good trader in futures. Okay? Most of the day traders, they look at the news a lot because they want something that it is moving too fast. So you need a big understanding of the news and the price in order to make money in futures or forex. Forex, for example, now it's collapsing. All the currencies are collapsing. The dollar, the pound sterling, they are going down. Bitcoin, they are going down. Everything is going down. Now you should have a strategy. Okay? This strategy, it is according to the mood of the market. It's not the market is going down and you go against the market. The market will crush you because you don't understand. Okay? Now, so Mike L, I don't day trade. I have been a day trader when I began, but I see that it's a lot of work and I am not interested to do that big work. For me, I like swing trading and I like investing. Not that much investing, but I like swing trading because I follow the swings of the market and it's good for me. But for you, Mike L, if you are interested to be a day trader, it's okay. It's okay because you follow the news, you follow a lot of stuff, and you can make a lot of money. If you are a good day trader, you should have some money. But because there are rules, you should have more than $25,000. But in futures, there is no rule. You can just go with $2,000 and you buy a contract, and you can day trade. You can sell short. You can go long without the need to have $25,000 in the stocks. Because in the stocks, if they find you are day trader, they will stop you. After doing 3 trades a week, the 4th trade they stop you. They say, if you are going to do a day trader, you should have money. $25,000, you should have it in order to do a lot of trades. Because you, in futures, for example, you can trade the whole day. At night, in the afternoon, in the morning, you can see news about anything, and you see the contracts are moving up or down. Bad news, you can sell short. Good news, you can buy long. And with $2,000 or $3,000, you can make a fortune. But this, if you are a good trader, understand that if you are a bad trader, you will wipe your account in a few hours. That's why now they have a micro E-mini in futures, which the risk is very small. You can do that if you are interested, and you can go do futures if you are excellent. Do micro E-mini. Micro E-mini, it means when they move only $1 per pip, or $2 or $5 or $3. and it's better than to go to the full contract, like full contract, and the pip is $100. So you will lose your shirt in a few minutes. Okay, so thank you very much, Mike L, for your question. Hamza Sabir, you are doing great work. Thank you very much, Hamza. Thank you very much. I'm trying to explain as much as I can for all of you guys who are following me here, and I don't mind if I have just few people who are following me. For me, it's just the people who want to understand the real trading, understanding the market. For these guys, I'm doing my channel. I am not interested in other people who have 1,000 and he will become a millionaire in 1 month. These guys, they don't come here, and when they see that there is work, they will leave. They go dreaming elsewhere. Okay, I don't sell dreams. Trading is a business, so you take it as a business. So it's not an easy thing. People, they think it's easy, but it is not. Easy, it means when you know what you are doing, it becomes easy for you. But before, it is difficult, because it has a lot of things you should understand in order to trade. When you understand, you can make money. So, top series set. Let's top series. I stop in your question and I drink some coffee. So top series says, hi Karim, is it possible to get 100% annual from day trading or swing trading year after year? Yes, you can. You can do that. But the thing is, it depends which stocks you are doing. Because performance goes with the risk. If you are doing a lot of risky things, you can make more than 100%. You can make 200 or 300 or more. But understand, if you are a bad trader, you can lose more than the market. Like the guys who are doing penny stocks. Penny stocks, for example. Most of the people who do penny stocks, they think they are easy because they are cheap. But they don't understand that they are doing something which is so dangerous, but because they don't know. They think because the stock is $1, it is easy to trade it. Understand that a stock that it is $1 is more dangerous than a stock that it is $200. But the people, they think otherwise. Okay? $1, it can lose 20%, 30% in a day, or 50%. Just like that. So if you have $1,000, the stock goes 50% down, you lose $500. Now, in order to make $500 more, you double the stock that you have. For example, 50 cents. It should double to go to $1 to get your money back. If you do 2 trades or 3 trades that are bad, you will wipe out your account. This is what the people do. Because they want money and they have less money. This is a problem for all the beginners, because they have dreams about trading, and these dreams, it's like gambling. It's the way gambling mind is. Gambling mind, he says, okay, I will put $10 in this ticket, but I can get $10 million. Now he is thinking about $10 million, but he doesn't think about the chance. Okay? The chance, if we have one chance out of 1 billion chance, you are betting on that. So the house, the casino, they know that it is no way that you make it. That's why you will spend all your life. And some people, they say, oh, I will do it all my life and one day I will succeed. But it's not true. There are millions of people, they have been doing gambling all their life. They have spent 20, 30, 100, $200,000. All their money they make, and they have been making a lot of money. They go to casinos and they lose their money. Okay? So if you have this gambling mind, you will not be succeeding. But success is real. There are some people, they can make 100%, 200%, 300% as a swing trader but what they do is they do more risky trades. They can lose a lot of money also. While an investor makes the money, this speculator or this trader, he can lose money because sometimes when you go into very difficult trades and it is volatile, you can lose a lot of money. So the less risk, the less money. That's why an investor, he tries to make very, very less what we call less risk. If you said to someone, an investor, that you can get 10% a year, he will give you all his money if you can give him that, for sure. Okay? That's why interest rate. Think about this. Think about it this way. If you have a good credit score right now, and you go to the bank and you say, I need $25,000, $50,000, and they can give you this money for 4% or 5% interest rate. Okay? So what? So 10% is big money, man, in investing. Because in investing, you are buying a lot of stocks, a lot of stuff. So the index or the stocks together in your account will be going slowly, up or down. That's why people, they don't lose that much money when the market goes down, and they don't lose too much money when the market goes up. But if you take a flying stock like Tesla before, Tesla goes from $200 goes to $750 in 3 or 4 months. You understand? If you bought Tesla, so I will just show you because guys, they want to see examples of what they say. Let's take Tesla. Okay, look at Tesla, an example, okay? Let's say you are a good trader and you bought it here, for example, at 254. 254, the stock has gone here to 668. Okay? 200. $900. So you see from 250 to 968, how much money you make? Let's say just an example, okay? Let's say you make 400%. Let's say you bought only Tesla when it was here at 200, 250, 289 or 300. Let's say it is 300. Now it goes to 968. You have made 300%. There are some people who have been here and they have made it. They have made it. But if you stay from this 968, those people who bought here, and now it is 500 something, you have been losing a lot of money. Let's say here, the stock goes to 368, so you will lose around 60%. If you bought here, you think that stock will go, because the people, they begin to speak, they say this stock will go to 1,000, 2,000, and people, they just come here and buy. But the market goes down and they sell here at 300, so they lose 60% of their money. So it depends. It depends where you are in the market. Okay, guys, you see how much you can make when you have bought Tesla. Just an example, okay? So understand that Tesla is a very big, dangerous stock. This stock is very, very volatile. You can make a lot of money, but you can lose a lot of money. So you understand? That's what I'm talking about. If you want to make a lot of money, you should go to these kind of stocks that move too fast. They are known. Technology stocks, drugs stocks, there are a lot of stocks that they go crazy. Up or down. But understand, if you get caught and you lose a lot of money, it's you who have gone to this kind of stocks. Because don't see the good side, see the bad side also. Okay? There are some stocks that have a gap down because of news or because of bad information about the company or about anything. The company can lose 60%, 80%, 90%. That's why the investors, they don't buy one stock or two or three. They don't trade. They buy stocks that are old, and these stocks doesn't move up and down too much, and they get dividend from them. That's it. And they don't want to make a lot of money, and they don't want to lose a lot of money. They want just their account to grow slowly. This is what they do. And in general, they are right. Okay, for people who don't know how to trade, you should be an investor. It's better for you to be an investor and to make an account for yourself and to invest for 10 years, 20 years, 30 years, 40 years. You will make a big account. You have dividend, and you can have a passive income from dividend. This is the ultimate goal of investing. Okay. Mike L said, do you trade for a living or do you have a regular job as well? No, I don't have a regular job as well. I don't have a regular job. I do my business and I trade. But before, when I come to America, yes, I did a lot of jobs. But you understand that for me, I like business. And I don't discover a stock market. I discover it late. And I come to America late. Okay? Before, I have no idea about stock market. I thought that you buy a share of a company, it goes up, you make money, and all investors are making money. That's what I know. Now, when I begin to study and trade and the other thing, I see that the stock market is not the same. That's why a lot of people, they have a vague information about stock market, and a lot of people, they are in the stock market, but they say, we hate stock market. I say, you hate it? Why? I hate it. It's a scams. It's Wall Street. It is this and that. Okay. And I ask him, do you have 401k? He say, yes, I have 401k. What's the relation with stock market with 401k? I say, 401k, it's Wall Street who created it, and they are taking your money, and you are in stock market because they buy stocks, and you are in, but you don't know. That's why when I ask people, go and check your 401k for where your money is put, because those managers, they can put your money into bad mutual funds. Some people, they don't believe me, but those who go and check, they come to me, they say, Karim, by email, okay, they don't come here and they say, but by email they say to me, thank you too much for showing us just an information that helps. Because some people, when they invest in 401k, they don't know that they can change their mutual funds, they don't know percentage, they don't know anything. So when they don't know, the managers of 401k, they put your money wherever they want. Sometimes the mutual funds, Some guys they show me their 401k. I have some friends, and because of trust, okay. For me, I'm not giving them any advice or any suggestions, but I say, okay, look at this, look at this, look at this. What do you think? You say, oh yes, there is a problem here. I say, okay, you know the problem, fix it. But for me, I don't give advice. I am not entitled to give advice to people, because you need a license to give advice and to. But for me, my thing is just to show you what's wrong. Okay, to show you what's wrong, and then you fix it by yourself, or you ask a CPA, or you do your job and you go search. And you just change what you want to change. If you are okay with your 401k, just leave it as it is, and that's it. Okay? Hamza Sabir said you are doing a great job. Thank you very much, Hamza. Michael Carpio, hello, Stock Doctor. Yes, I remember you. You say Stock Doctor. I am a doctor for traders, for psychological problems. I am doing more psychology than trading. Michael Caprio, think silver, gold, run soon. Yes, okay. Run soon, or they don't run and they sleep, or they go down. This is you should follow your trading strategies, and you should go like this. Okay. Duna, hi teacher, hi Mike, hi Hamza, hi Michael. Hi NASA, hi. All the people are hi. Thank you very much for coming. NASA said he was trading UVYX. Thank you very much for remembering me, because I don't remember the thing. Now, guys, it is 1 hour 31 minutes. So I will stop here. So, guys, right now, if you have questions about our subject, which is ETFs, please ask your questions. If you have other questions, whatever questions that you have about the stock market, you can ask me other questions as you like. And for me, I will be just waiting for you guys. So before I see other questions, guys, let's go to Bitcoin, because a lot of times before I showed Bitcoin when it was like $3,000. It's many months ago. It go until 13,000. And then from 13,000 goes to 9,000. From 9,000 goes to, I think, 3,000. Now it's like 4,000 something. So if you don't mind, let's go for a minute. I will try to see Bitcoin chart, just to see. Let's see here. I will bring you the chart right now. Okay, so let's check this if it works. I don't know if it works. Yes, guys, it works. So, guys, what I ask you, please ask questions. Ask questions about ETFs, or about anything that you like, or about the market in general, or the economy, if you have other questions. Because for me, I always make it 2 hours. I can't go beyond 2 hours, but now we have time. So let's check the Bitcoin. Here it is called CoinDesk. This is the website I just checked. I don't have a regular website, but it looks like nice. So it looks that it is going from 7,189. Okay, at 10:16 a.m. today, it was 7,189. Now it is 6,706, and it is minus 2%. Let's see for 1 week, for 1 month, for 3 months. Okay, now see here. Here in February 14, it was 10,367.53 cents. It goes down to 4,900. It means like 5,000. And now it is like nearly 7,000. Okay? The market cap is $122 billion. It's a big market. Okay? Now let's say 6 months. Let's say 1 year. Now 1 year here, it was 12,500. Okay? And all the time, oh man, all the time it was here 200, 300. Before it was $124. It goes till 18, I think it's 19,000. 18,984 in December 2017. From 18,000, it goes down to 3,000 something, 3,000. Now it goes to 5,000. Now it is 6,000. Okay, we will never know where this goes. So the best guys are those guys who begin to know Bitcoin at the beginning, because this is the bubble of thing, and from that it's going down and down and down. And you can see, for example, Ethereum. So Ethereum, 6 months. Okay, 6 months it was 284. Now it is 153. It's big. Okay. Let's say the other ones. Okay. There is a XRP. Let's see, XRP is 0.18 cents, 3502. In stock market, we have only 4 digits after the 0, but this Bitcoin, there are 6, 2, 4, 6, and each one counts. It has 7 billion, like the market. Okay. There are some news if you are interested. Okay, news to read. You can read, and you can follow stocks. You can follow this as you might know, but understand that I am not doing day trading, and understand that some people, they don't know. Okay, some people who don't know. Let's drink some coffee. Some people, they don't know that you can buy long and sell short. It means you can do like a day trader, not an investor. Because people, when they see a Bitcoin, they think when Bitcoin was $1 and now it has been going to $18,000. This is what they think about investing, about many years. But understand that Bitcoin, you or the other ones, you can day trade at any time. You can sell short and you can go long. And this, you should need a broker like, I think, Coinbase, and you do the stuff. For example, you don't wait. You are not. You shouldn't be an investor to buy some shares or one share or whatever. Or the good thing also about Bitcoin, you can buy fraction. So in stock market, you can't buy a fraction of. So I will explain this. I think all the people they know about it, but I will just explain this. At least the people they get knowledge. Okay. So for example, let's say just an example. Let's say we take a stock. Let's say I will give you a stock that it is expensive, like Amazon. Just an example. I will see the price right now. 2042. Just an example, okay? 2040. Let's see, what is it? $42.67 is the price of Amazon. All the people know Amazon. It's one of the biggest stocks. Okay, Amazon. Okay. Now, let's say you want to buy Amazon. So if you don't have $2,042.76, you can buy one share. Okay. But if you have less, let's say you have $2,042, you don't have this 76 cents in your account, you can't buy it. Okay. So you should bring the money, as they say, as the bid. Now, let's say we take, this is Amazon, we compare it with Bitcoin. Let's say Bitcoin, 6,600. Let me see the numbers. 6,691.30. 91.30. Okay? So suppose this is a Bitcoin. Okay? One Bitcoin is one unit of Bitcoin. It means like one share in Amazon. It's 6,691. Now let's say you have only 1,000. You say to yourself, okay, I have only 1,000. Okay? So you just divide this 1,000 onto this 6,000. So you can get, for example, just an example. Okay, I'm not sure about the price because I calculate by my mind. It could be like 0.18%. So you can buy 0.18 Bitcoin. And if Bitcoin goes up, you will be making money. And from 1,000, you can make, if this doubled to, let's say, to 12,000 in 1 year or two, you can make $2,000. Just an example, okay? So in Amazon, you cannot divide, and you can buy a fraction of a share. Yes, in 401k they do it, but they do it virtually. For example, you can find in your 401k that you bought 16 shares and 15. So in stock market there is no 15. There is no 15, 16 shares and 0.15 of a share. It doesn't exist. But in 401k they just give you a fraction, because they have a virtual account and they calculate this. Okay? Now, for Bitcoin, you can buy and sell. There is another thing I want to tell you about Bitcoin, because most of the people, they don't know, is that is that you can go long, okay? Go long, and you can sell short. Sell short in Bitcoin. So this is in Bitcoin or any cryptocurrency, and this is in trading, because the people, they know just the other way, which is they know only investing. So it's not true. You can day trade also. In investing, you buy to go long only. Okay, you buy, for example, 6,691, as we said. If the stock market goes to 10,000, you will be making money. Okay. And it's very volatile. As you might know, Bitcoin is very volatile. You can make a lot of money in a shorter time if you are investing, but if you are right, because I understand that if you are wrong, you can lose your shirt. Okay, so for me, if you are going to do investing or to do something like that, try not to put too much money. Okay, try not to put too much money, and I give you my email for those who are interested. To send me an email. Whatever things you remember, you can send me an email. And for those who want to, those guys who want to go to my website, okay, I am just working on my website. It is not finished yet. So guys, but the links are working. But until now, I am still working on my website. So if you don't find links to training or so, but I will tell you something else. Okay, I will tell you something else. If you are interested in the ebooks that I made about the strategy, guys, I'm just telling you, some information. I have made some ebooks. They are new, okay, and for those who are interested, okay, I made one is how to invest in stock market crash 2020. I give a lot of information and solutions, and I have made another solutions to bear market 2020. So I made a lot of ones. So if you are interested, because I didn't put them in the website, if you are interested, I will send you the links. And because I didn't put the links into the website, but I have them ready. So if you are interested to know more, you can just send me an email, and I will send you the links. Okay. So guys, I am waiting for your questions, but I see that today you are. I don't know if you are tired, or there is no question. I don't see any question right now. So guys, I will give you just a few minutes. If you have no questions, I will end this session, because I can't just continue to talk. I have finished the subject of ETFs, and guys, I will just go to my chart, just to show you the ETFs that are, we have hundreds and thousands of ETFs. So understand, if you want to go to them, you will be overwhelmed. How many ETFs do we have? So don't overwhelm yourself with ETFs. But if you are interested in an ETF that interests you in the whole world, if you are interested, for example, in something that bonds, for example, you are interested in bonds. You don't want to go to your account and buy real bonds like 10-year treasury bond or whatever bonds you want. If you want just in the stock market, it's very easy to buy them and sell them, better than to buy this stuff. Gold, silver, things. So let's go to the chart. I will just show you a way. Okay, you go here. Okay, you go to this all main scan component industry ETF. Now you hit ETF. Understand, guys, all this ETF that you see, we have hundreds here and we have thousands. Even there are some that you will never know what they are doing. But for example, here you see iShare FTSE Xunha China 25 Index Fund. You find things that you will never believe they exist. There is also, for example, a world index, Nasdaq Biotechnology, Russell 1000. We have so many cash cows. I don't know even what does it mean. Internet giants. There are a lot of things that you will never know they exist before. Okay, and it's very good. It's very good for you guys just to check these. If you are interested in one thing or two, you can see what they do. And then tortoise water fund. What's this? Tortoise water fund. We have stocks. I don't know what's this stocks that are here. It means ETFs with thing. Okay. So guys, you can go online also, and you can go online and you search for a lot of things that you are interested in. It means you go online and you search if you have an idea or you have a strategy or you have something else. So there is also what we call about inverse ETFs. We have seen them before, and I have made an ebook before, and you should guys, you should if you are interested, you can check that ebook also, and we have YouTube. We have videos about it also, and it means for me, I have made around 3 new ETFs according to what's going on in the market. So the market in general now it's going up a little bit, but we don't know. So if you are interested to know what's my opinion and what we are doing in our trading account, in our investing account, in our options and investing lessons, you can join me to my golden subscription or silver subscription or basic subscription according to what you know. And these in that subscriptions, you will follow me for true, because there I give all what I know, because this information change from one week to the other. That's why in each week I make search, I make selling short search, I make going long search, I make some lessons about investing, about what you call put options or call options. I give you my strategies accordingly, and we buy stocks, we sell stocks. So it means that you will be aware of what's going in the market. At least you can get good decisions. Okay, so thank you very much, guys. I think that today you have no question, and it's very good that you maybe you have got information about ETFs. So you have no questions until next week. You are prepared for maybe tomorrow or after tomorrow. So guys, since there is no question, now it is 1 hour 44 minutes. So I will end this session. If you remember anything, my email always in the video, in any video, you find my email. Take my email and send me a question. If you have some investment, or you have some to give you my second opinion, or you have anything else, please let me know. For me, I'm trying to help as much people as I can, and some of my opinions are just free, so I don't ask you money for that. It's just to help my students and my followers. Thank you very much, and see you next time.